Now, a day after the National Treasury revealed that the regulations for counties to begin tapping into the capital market to raise funds are ready, the exchequer is being advised to tread cautiously in allowing the devolved governments to widen their reach in raising debt. The Institute of Economic Affairs argues that the Treasury should focus first on streamlining disbursements to counties before access to the capital markets is granted. Julian Samboko with the details.
With only 5 months left to the close of the financial year, counties have received only 145 billion shillings worth of their equitable share allocation. This translates to 46% of the full amount they should receive and speaks to the challenges faced in timely disbursement of funds to the devolved governments. The window to tap into the capital markets through securities such as bonds is widely expected to help address the cash crunch counties face every year. Economic pundits, however, are urging for caution in the actualization of this plan.
Given government's quantum of debt already and how it's been managed, I think there are two concerns. The first, obviously, is if you look at the Auditor General's findings about counties, financial management is still very, very weak. The second is, at this point, obviously, because the national government would have to underwrite this debt, in a way, guarantee this debt, the kind of strictures that would actually have to be applied to counties are such that very few of them would actually qualify.
According to the latest full-year report from the Office of the Controller of Budget, only 11 counties met the Public Finance Management Framework requirements that no more than 35% of expenditure should be dedicated to the wage bill. This raises another point of concern around counties being allowed to raise debt.
I don't think that any of them are ready, say, within a medium-term range of a year or two. Given the financial position of most of them, part of it coming from the backflow of the difficulty that the national government has actually sprung on them.
It's not just saying you're not spending 30% on development. It's what is the implication? Is your entity growing? Is your county growing?
In his statement issued on Wednesday, Treasury Cabinet Secretary Ukur Yatani lamented that majority of the counties which have applied to raise debt in the capital markets fail to meet the set thresholds. It speaks to the level of preparedness through which counties need to be taken to ensure they are investment ready. Julian Samboko, NTV.